Hey, everybody over there in the internet world. Hey, welcome to today's podcast on the secret no one will tell you about retail credit. For some of you who have out there have met, I've done a couple of these in the past. I know Steve Weibel here has done quite a few here recently, and Ty. Um, they asked me to jump on board and be able to help go over this. So, welcome everyone who's attending and watching this, even on playbacks later on. For some of you, notice I'm kind of sporting some new glasses here. My eyes have, I think, gotten to the point where they're old enough where the screens have really affected them. So I'm trying these new things out where they're supposed to help me improve my strain. So it's only been a day, so don't ask me for an opinion on how it is. So ask me in about a month to see if I'm doing well. But let's jump on into it. This is dealing with secrets. No one's going to tell you about retail credit. Let me see if we make that here a little bit bigger. So in that way we can go through it. For many of you who have been watching our YouTube videos, my name's Lane McGleston. Ty Crandall is our CEO, and oftentimes he's on these educational. He's actually attending a mastermind, so out during this week, and that's why I'm here attending. So jumping right into it, I know a number of these past webinars that we've done talk about primarily business credit and business funding. Today, we're going to be focusing specifically on a business credit that can be established without the personal guarantee, and and trying to help clear up some of the information that's out there regarding on what can and can't be done with or without a personal guarantee. As I'm talking with clients, usually I like to clarify for them that there's two ways really that you can build business credit. And this is to help just give the foundation to have a better understanding as we jump into this topic. These two ways is one with a personal guarantee, and the second is without a personal guarantee. And depending on what type of credit that you're looking to establish would depend on what type of credit or personal guarantee would need to be included. Now, to sum it down really in simple terms, if you're applying for funding, so cash funding, working capital, a bank loan, a line of credit, something that you can use basically for anything in your business expenses, typically those will require a personal guarantee. And on the other side, credit or store accounts can be established without a personal guarantee, but there is a strategic process on how that is done. So today we're specifically focusing on the second option, vendor accounts and store accounts that can be established without the personal guarantee. And I know on past webinars, and I think some that have here coming up here in the near future, they're dealing on funding options that would be based on a personal guarantee. So a general rule on getting started with building business credit oftentimes is the hardest part. There's a lot of steps that are involved, and many business owners just don't know what to do. So wouldn't it be nice to have an instruction manual kind of leading you through this process, or a roadmap for those who are out there can just following you kind of like GPS coordinates saying, hey, this step, do this, helping you through it. So we do our best to help out in this particular area. For those who are new to Credit Suite, the main product we offer here, which is going to be referred to in this webinar, is our Business Credit Builder program, or on our website, it's indicated as our core program. So it is a roadmap and an instruction manual taking you through the process on building up business credit with these vendor accounts and trade accounts without the personal guarantee. So that's what we do here at Credit Suite, just to give you an idea of that product and service that we offer. So we notice that a lot of business owners basically are looking for those instructions. They're just not where, they just don't know where to go and find them. So that's where we came up with this service. So retail credit can push business credit beyond the beginning. So building a fundable foundation is very important. So before you apply for any credit, it's important that your company looks and operates the way a company should look and operate. I know in a number of past webinars, we aren't going to go over all the specifics here in that foundation, but there are other ones you can search out which do focus on the foundation on how your company should look and operate. So you can't have business credit without a foundation. Same as you can't build a house without a foundation. You need to be able to have a solid foundation before establishing credit. Um, that's where, after the foundation is set up and your structure's there, that's where starter vendor accounts come in. So what we did is we took all the vendors that we're aware of that report to the credit bureau, which surprisingly isn't very many. If you took all the business accounts out there that provide business funding or business credit, less than 10% actually report to the credit bureaus. So we took all of those and broke them into 4 different tiers based on how easy it is to get approved with those different accounts. And kind of a metaphor or an example here, since it's now almost winter time, we've already got some snow up here in the mountains in Utah. But if you're building a snowman or if you're building a big snowball, you have to start off small and then have it gradually grow as you push it down the hill. It's similar to business credit. So as you're building up business credit, you have to have your foundation and you have to start building off small first and then let it grow over time. So initially, yeah, to keep that ball rolling, it's not enough just to start the starter vendor accounts, but it takes effort to build that snowball and get it to the edge so you can continue building up your business credit and business funding overall. So after you get it things moving for your company, then it's all downhill from there because then you have the funding and the credit that you need to run your business. So that's where you get the next step after the starter vendor account. So after tier 1, which we call our starter vendor accounts, comes to tier 2, which are retail accounts and building upon them. That's where our business credit builder program truly can help. That's the program that I referred to earlier that helps you with a roadmap or that instruction manual step by step through that whole process. During that process, tier 2 would be the next group of accounts, or oftentimes they fall into our retail store accounts. And that's where in tier number 2, the credit providers, that's where they're looking for prior history. So the nice thing about tier 1, the starter vendor accounts, are these are accounts that often don't require any personal guarantee or revenue or even oftentimes time in business. Since they're the easiest to get established, it helps you get that foundation so then that way you can build upon them in tier 2. Now, even with that limited business credit history, tier 2 is still looking for prior history. That's why we recommend after you get your paydex score with Dun& Bradstreet to be able to move forward and be able to establish these tier 2 accounts. Or they might ask you for a personal guarantee. A common asked question that I get from clients is if they don't have any existing history, is it okay for them to apply for tier 3 accounts, tier 4 accounts? And the answer is it's okay, but just be aware that with limited business history, that's very high likelihood they will ask for a personal guarantee. And if you're willing to do that and guarantee it, then you can. You can apply for any of those accounts with a personal guarantee. So what really sets them apart is that they're going to report what's called as your on-time payments to the business credit bureaus. So one of the biggest misnomers or secrets that come to building business credit is oftentimes if you call up a vendor, let's say Best Buy for an example, or Apple Computer, and you ask them, do they report to the credit bureaus, the business credit bureaus, more than likely the answer you'll hear is yes. But you need to clarify it because oftentimes they'll report negative information back to the business credit bureaus. And what we're looking here for is positive on time payments. These are kind of proactive, positive payments that are reporting back on your credit bureau. And that's the type of history that we're looking to establish. Apple Computer, for an example, they used to report on time positive payments in the past. They currently don't. Now they just have negative payments. So it's always important to understand which accounts you're applying to be able to apply and use accounts that are positive reporting back to the credit bureaus. Some additional information is not all business provide to do that. Many will only report the later missed payments, as the example of Apple Computer, if they actually report at all. As a result, these credit provider reportings, your business credit profiles can continue to grow. And your business continues to grow in a strong business credit score beyond just the starter vendor accounts that are happening at the very beginning. And this is really where your business credit can really start to take off within tier number two. Tier number one, they're really, I guess, harder. You have to really put the effort in to make these accounts, get them established. But getting that foundation with your business credit definitely is important. And then you're able to get into most of like the retail credit that are found in tier three and tier two, tier three, and tier four accounts. So business credit building with retail credit. So retail credit refers to revolving credit stores, cards, or store accounts with net terms. So it's good to clarify between these two because a store, Sam's Club is a good example. Sam's Club offers a credit card, but they also offer just a store account. Same with like Costco. Costco offers a business Visa card, but they also offer just a membership for a business for their account. Both of these can be considered retail credit because both of them have the possibility of reporting back to the credit bureaus, but it might be a revolving account or a net term account. So some who might not be familiar with that, a revolving account is like a traditional credit card where you can hold a balance and pay a minimum amount, where a store account is typically an account on a net terms only for purchasing products and services, and it's you have to pay your bill within that net terms. Most net terms are around net 30, but there are others that do net 20 or net 15. Whatever the net and the number is, the number represents the amount of days you have to pay off that initial purchase. So if you are getting a net 15 account, just be aware that after that purchase, you only have just 2 weeks, 15 days in a way to make sure that that's paid in full. But again, most of the accounts that are out here that we deal with, we see on average, they do it on a monthly basis, net 30s. So some examples would be Home Depot, Office Depot, Quill are some example of different accounts. Other ones such as Apple or Best Buy might not currently be reporting, but they can still provide these accounts to clients. So another common question asked is, how do you find these tier two retail providers? And that can be truly tricky on these different type of accounts because despite the fact that most large retailers offer business accounts, many do not make it easy to find out whether if they report or not. And if you are working on actively building up your business credit, then it's vital to know if they are reporting or not. That's part of the benefit of our business credit builder program or our core program is that particular program. We have our advisory team, a group of individuals who are fantastic when it comes to not only building business credit, but also finding accounts that can report. So they're actively on a monthly basis looking for accounts that report or even keeping the information we have in our program current. So that way you know that you're getting the most current information from these vendor accounts. So that's definitely a great benefit of being able to know what all the underwriting criteria is, who they report back to, because they might not report to all three, but then also what tier they're in. So that way you know when it's appropriate to apply for them. So we have a whole database of vendors that are found in all four of the tiers and even in tier number two. And then along that, we'll help you with that approval process and which business credit agencies they actually report back to. Some general requirements, and this is kind of just touching the service because each vendor has its own specific rules, but some general requirements, just to kind of give you an idea of what they're looking for, is when it comes to retail credit, most of them are there to help build your business credit, but each of these accounts have their own different approval amounts. In general, most are looking for a paydex score of 80. So that's why in tier 2, 3, and 4, it's recommended to wait until after the starter vendor accounts are established because that's where you get your paydex score. In the starter accounts in tier number 1, you want to make sure those accounts are established and reporting so you have an active 80 paydex score before applying for the other accounts. You also have to have that fundability foundation or that credibility. That's making sure, just the same way as on the foundation of a house, you have to make sure your company has that foundation as well. We aren't going to go over in detail those, but in prior webinars, we have done webinars specifically, or you can go to creditsuite.com. And if you go to creditsuite.com, our main website, it will kind of prompt you to enter in your name, phone number, and your email address, and we'll send you a free guide on the initial steps on the foundation. So if you are looking to build business or business credit and you haven't officially started yet, feel free, stop on by our website at creditsuite.com, download that free guide, and we'll kind of help you with that foundation to kind of point you in the right direction. Some other general requirements for approval are making sure you have a business checking account, making sure that you're officially incorporated with the Secretary of State and have an EIN number with the IRS, making sure your business name is uniform across the board. So it's the same listed on the Secretary of State, EIN number, and your checking account, as well as making sure you have a Dun & Bradstreet number. So that requires officially applying and getting a number with Dun & Bradstreet, because oftentimes the applications for these vendors will ask for that number to be included as well. Other general requirements that are in here is some will ask for a minimum time in business. So they want to make sure that the business has been established for a certain amount of time. Normally it's around 12 months with some of these vendors. And some will also look for annual income requirements. Now, these are oftentimes accounts that are in tier 3 and in tier 4. Mostly the starter vendor accounts in tier 2 don't require these as much. But again, these are just some general requirements. And some will extend credit and still report to the business reporting agencies, even if you don't meet these initial requirements and don't have enough business credit history. So you might not think you hit those requirements, but sometimes you can surprise yourself and you might still be able to get those approvals here. But oftentimes, if you don't hit those requirements, and this is where another, I guess, secret that comes into it is, it goes back that if you don't hit those requirements totally, you can still apply, but more than likely they're going to ask for a guarantee. You can always apply first without it, get their response, and see if you want to respond with that personal guarantee. So retail credit and a personal guarantee. To help clarify those accounts with and without the personal guarantee, is there are some accounts that will not require a personal guarantee, but it makes it much easier to get approved with minimal business credit history. This is why the first steps in the business credit builder in that foundation are so important, and the tier 1 accounts. Because without that strong business credit profile, you might be able to get an approval with the personal guarantee. But if you have a solid foundation and prior business credit history reporting with the starter accounts first, that's when you're able to get approved for these tier 2 accounts and tier 3 accounts without the personal guarantee. So if this was the biggest secret that I can share with you today when it comes to getting retail accounts that others aren't going to share with, is this very secret alone. Is as long as you have those starter vendor accounts and you're into a kind of a higher end accounts, you can definitely apply. Even if they prompt you to leave your social security number, you can leave it blank and apply without it and get approved. But it will be based on your prior business credit history. And that is the big secret that no one wants you to know about retail credit. So you don't have to give your person a guarantee. So there is another way. And that's why strong business credit profile for your business is so important before you actually apply for those accounts. It's not that the guarantee is bad, meaning in the past, some had mentioned that if you're leaving a personal guarantee, it means that that's a complete no-no. Not necessarily. It's just another avenue to be able to establish what you're trying to establish, is the way that I look at it. Is if you have it available and those tools are available in your toolbox, they're there for your ability to use if you want to. Meaning, if you don't want to use those tools and you have tools available to do it without the personal guarantee, then you might as well. But sometimes you might need to do that to start off, just to be able to help your company get on the right road and get that snowball rolling, so that way you can go through it. But one of the things to consider is whenever you're leaving your social security number, it does add more liability to you personally. So if you can get away with it without it, hey, why not? So some examples of tier 2 credit from these different business credit builders. Let me see if they have them right in here. Number one, Home Depot was mentioned earlier. They do require an account. They require an EIN number, business address, that's uniform and matching everywhere. They do require a Dun& Bradstreet number, and in some cases, a business license, like for contractors. If you're a general contractor that's out there and you're working on building houses or on that end, oftentimes they will require that as well as proof in business. Another example or other points in here specifically with the Home Depot would be a business account or business checking account. They also like to see a minimum of 2 accounts reporting to have some overall prior history, that overall application. They'll ask for references on the applications that they can verify. Now, those don't have to be reporting accounts. They could actually be utility or other accounts that are established in the business name can be used as a reference. Your phone number should be listed in 411, and specifically with Home Depot, they're looking for 3 years in business. Then you have to have a good Experian and Dun & Bradstreet report with specifically Dun & Bradstreet and 80 Paydex or higher. Now, if you do have great history and you fit these requirements, it is possible to actually request a net 60 account rather than just the typical net 30 account that they often come with. So back to kind of that equation, if you're trying to determine what does net 60 mean, basically the number after the net is the amount of days before you would have to pay out. So in this particular case, it's basically 2 months. They're giving you a 2-month leeway to pay on your purchases. But if that's not enough business credit history, less than 3 years or the other requirements, you can still apply, but just be aware more than likely they're going to ask for that personnel guarantee. Another example would be Quill. Quill.com provides office supplies, things that you can use for your office. They're also looking for a business address that matches everywhere, a Dun & Bradstreet number, a business license, again, if that's something that fits within your specific for verification, your business checking account. They also are looking for 3 prior trade references. Now, again, these are references that don't necessarily have to be reporting, so you can use utility bills or you could use other references specifically that your business has. And we have seen quite often that Quill will verify and call these accounts before giving out an approval, just as giving you that kind of a heads up. So make sure you're using references that will give you a good reference on the application. You must have a good Dun & Bradstreet score of 80 or higher, and they're looking for companies that have been established just for 6 months. So unlike Dun & Bradstreet looking for 3, these ones are less, around 6 months. New businesses or businesses with no credit history or Dun & Bradstreet may require, it's possible they may require you to do a prepayment purchase over a couple of months. And we've seen this kind of vary. I think in here they put down 3. I've heard others that it might be 4, but you can start that process of being able to get approved by making purchases beforehand. Now, another example, I'll pause here for a moment because oftentimes I get a question that's common is people will ask, how much do I need to purchase from these vendor accounts to make a difference? What we recommend is at least $50 or more. If it's beyond that amount, we'll indicate it like in our credit builder program. But the reason why 50 is important is because both Dun & Bradstreet and Corporate Experian will round to the nearest $50. So if you only purchase $10 from Office Depot, for an example, when that reports back, Dun & Bradstreet's going to say, it's not enough. We're not going to report it. But if you do 50 or more, since they round to the nearest $50, they don't report exact dollar amounts. They just round it. Then they'll look at it and say, oh, hey, they met the minimum. So that is an important factor to be aware of. And I don't think we go over that specifically in this webinar, but I figured might as well mention it because it's another little secret, a little tip on helping you build business credit. So going back over here to Office Depot. So Office Depot, to get approved for a net 30 accounts, you also have to have an EIN number. That's a A common occurrence, just so you're aware, on most all vendors, EIN number is important, as well as a business checking account, as well as a business address that's uniform across the board. Dun& Bradstreet can depend. Most do want you to have a Dun & Bradstreet, so definitely be aware of that. Other aspects is the business license, just like the other two. That's very important. The checking account, in particular for Office Depot, is they're looking like Home Depot, 3 years in business. Having a good paydex score is definitely important as well, because they are checking that prior history as well as a good Experian business credit score. Now, again, the same kind of criteria takes place as if you don't have these set up specifically for your company and you're still really interested in applying for that account. You can just be aware that there's a good likelihood they're going to ask for that personal guarantee. But if you do fit those requirements, then you might as well leave it off the application and apply without. Once you've gotten around 5 or more of these vendor accounts, the starter vendor accounts, I want to make sure I need to clarify on that. So once you have about 5 or so starter vendor accounts reporting, that's really when you're eligible to be able to move forward on those tier 2 accounts or those retailer accounts. That is assuming that you've handled all your credit from the starter accounts wisely and you have good credit history reporting. You don't want to make a mistake on step number 1, which prevents you to moving on to step number 2. So always make sure you're paying off those accounts on time. Many of these credit providers have more than one option when it comes to business credit. So for an example, they may offer you net terms as well as a revolving account. So again, a good example would be like Sam's Club or Costco, where they have a revolving account or they just have a membership store account. So if that's the case, you may not qualify for the revolving account, but you may qualify for the net term account first, which is okay. That's helping you get your foot in the door, start helping you get some initial credit reporting. And oftentimes what you can do is after you build up that history with a net term account, then you can apply for a revolving account and be able to have the benefits of a revolving account. So you can use that net account, I think right here, to build your business credit profile until you can qualify for that revolving account. So a couple of these that are out here, examples on what it takes to get approved. They make it pretty clear on building that fundability foundation is very important in getting these initial accounts reporting. So all back to that same similar list, that foundation, having a proper name, address, phone number, having your Dun & Bradstreet account are all quite important. So once you do, you can get the retail credit accounts from Tier 2 reporting as well. And this helps keep that snowball rolling and growing as you build business credit upon each other. It also allows you to pick up bigger accounts. So accounts that we have listed in Tier 3, Tier 4 to be able to continue to grow your overall business credit. And if it's done properly, the need for the personal guarantee can really be kept to a minimum as you build up those credit history overall. So just to kind of do a little recap on those secrets and how you build business credit, you want to make sure that as you're building business credit, before you apply for any accounts, you got to make sure you have that foundation established. Make sure you have that proper name, proper address, make sure you have the proper reporting licenses if needed, your bank account, your EIN number, so that way you can officially look and operate the way a company should look and operate. So before doing that, make sure you have your fundability foundation set up before you get those initial accounts. Then start with the tier 1 accounts. Those are the retail credit providers will give to you. And those are oftentimes the easier accounts to get approved with. And oftentimes you can do all of those without the personal guarantee. Now, before moving on to tier 2, just as a recap, remember you want to make sure that you're actively monitoring your account and that you have a paydex score established. Because once the paydex score is established, that's basically the qualification you need to move on to tier 3. So the Business Credit Builder, or our core program, if you're on our website at creditsuite.com, that helps you through that whole process on finding the right creditors, tier 1 accounts, tier 2 accounts, and it's basically that roadmap or a blueprint taking you through the entire foundation and helping you avoid any pitfalls that you might not have been aware of as you're actively building up your business credit. So if you are actively looking to build business credit and you're really interested in this process of helping your business, and this is either ways, if we go back to the very beginning, how I mentioned there's the two ways, there's with the personal guarantee or without a personal guarantee, we can help in both cases. If you're specifically looking on building up without the personal guarantee, that's our main business credit builder program or our core program, which definitely we have to be able to help you through that entire process. But if you're looking for funding and you can qualify for funding based on good personal credit, good collateral, or good cash flow for your business, we also have our funding department who would be able to help you through that process as well. But it is based on prior qualifications. So just make sure that you're aware on that process. And I believe next time when Steve hops in, or I think it might be this coming Thursday, we're actually going to go through that second process, the process based on personal guarantee. So kind of a little preview on what's coming up would be cash flow financing. So that's one of the C's. We've got cash flow, we have credit or collateral. So we've got cash flow financing, what it is and how can you get it and how can it help your overall business. We also can help you with other aspects of any other type of legitimate funding program that are all in a single place. So if you don't necessarily have cash flow, but you do have good credit or collateral, let us know and we can open up that conversation with our funding team. Now, specifically with here, there's no cost that's involved for you to talk to our funding team to see if you can qualify. Um, Now, caveat is there's always a fee after the fact when you get the funding. So this isn't free money. After you get the funding, the lender does have a fee or there is some form of charge on the back end. But to open up that conversation with Credit Suite and see as a pre-approval base what you can qualify, yeah, there's no initial cost to be able to do that. So you can use your loan volume to even get lower rates. You can look at business blueprints or even move up to SBA loans as well. And in that way to help continue getting the funding that you need here for your business. Um, wow, that was a quick one. Some of these ones that I've done in the past usually take a full hour, but I think they've noticed to be able to streamline them down. So hopefully you've enjoyed today's webinar as we've talked about the secrets that you really don't hear out there about retail credit and how to get established with these accounts. Really want to hope you had a wonderful afternoon, a great time attending this webinar. We've got our main website, creditsuite.com, or feel free to email us here at info@creditsuite.com. And I believe over here in the notes, you can always I believe you have an opportunity to kind of see in here. You can always schedule a consultation on our main website, or you can do that free download guide to help you with the foundation if you're just getting started. So feel free to hop on over to creditsuite.com, get that free guide. And then if you scroll down a little bit, it has a consultation link where you can set up a consultation with a member of our sales team. And then we can actually get that information to you regarding on what you can qualify for or go into a little bit more detail specifically of our business credit builder program and how it can help your business succeed overall. Thanks again for attending. We hope you have a wonderful afternoon and being a follower here at Credit Suite. Have a great day.